Good morning, how are you? Good. This is Business Cafe right here on KTN News. This is where we give you insights on the latest in the world of business and some of the stories that we are focusing on today in the world of business. My name is Kelvin Nyakundi, and today we'll be talking about inflation, and I'll be joined by Georgina Malombe, who is a tax analyst, and we are going to be discussing about this. Also, the UNGA issue that happened yesterday, we are also going to be talking about that. But before we get to that, we are also you can get your standard newspaper today, pull out on Financial Standard, where we have stories on economy shakes off Paul Jitters. We also have stories to do with the Prime Minister Blair's foray into Africa Star's continent, and also we have the impact of the euro parity with the dollar. So get yourself the Standard today and get the Financial Standard pull out. Right now, we can report that you may soon have a huge burden taken off your shallow pocket as the high cost of maize flour comes down significantly. The government is reportedly working on a subsidy program to see maize flour prices fall to 100 shillings per 2 kilogram packet beginning next week. KTN's Brian Otieno reports.
The subject of maize flour has been a matter of vicious contention nationally, even making the much-needed political fodder for the political class to score points with the electorate in this season. Various sides trading blows and blames on who should be responsible for the historical rise of unga, a Kenyan staple food that now fetches for not less than 210 Kenya shillings on retail. But thanks to a recent government intervention, the price of unga may as well reduce by at most 100 Kenya shillings after a subsidy program put in place to cushion the mwananchi from the important day-to-day consumer product.
This measure is intended to reduce the costs of maize that is coming into the country and therefore impact on the price of maize and unga that is increasing in our retailing points across the country. And I've said this is in addition to a measure we already authorized millers to import maize from which is duty-free, because duty on maize from the rest of the world also contribute to the high cost of maize.
Investigations conducted by KTN News and papers seen and signed by Agriculture PS Francis Owino, the recommended retail price for flour should not exceed 100 Kenya shillings for a 2 kg packet, 250 Kenya shillings for a 5 kg packet, and 490 for a 10 kg packet. In addition, the ministry will send representatives to the millers' premises and depots to verify proof of maize flour sales in the market in a bid to tighten surveillance and avoid cases of unscrupulous traders fleecing customers. A spot check in supermarkets in Nairobi town shows that there hasn't been a price change even after the directive, perhaps symbolizing the clearance of previous stock. With the directive taking effect Monday, traders will most likely effect next week with the next series of supply. Brian Otieno, KTN News, Nairobi.
Now, employers in the agricultural sector are warning of imminent job losses and closure of farms due to an acute shortage of fertilizer in the last couple of months. Now, through the Agricultural Employers Association, they note that the situation has been worsened by soaring prices of farm inputs and fuel. The most affected are flour farmers who are currently coping with shortage of nitrate calcium fertilizer, while livestock farmers have been hit by scarcity of livestock feed. Now, according to Area FAST Chairman Wilson Odio, the sector was currently undergoing several challenges that are adversely affected production. Now, we'll have this story later. Now, we are going to move on. When we started, I told you today we are going to be discussing about inflation. We are also going to be looking at the trends in inflation since the current government came to power, that is 2013. We are also going to be looking at where we are right now in 2022 from January up to last month. All right, so let us have the figures of 2013 to 2021. All right, 2022, we have January, the inflation rate was 5.4%. In the month of February this year, the inflation was 5.1%. In the month of March, it was 5.6%. It increased there. All right, we're going to move on to April. April, we had 6.1% inflation rate. In May, we had 7.1%. And then in June, we had 7.9%, which is higher. All right. We're also going to be looking at Kenya's GDP. 2021, it was 7.5%, and this year is 5.5%. All right. Now, to discuss this, we have Georgina Malombe, who is a tax analyst, and also you deal with these issues. So, all right, welcome. Let us now start with the trend of inflation. We've seen this year where we started in January, we were at 5.1%. And then in June, we come and look at it at 7.9%. Also, I believe the price of unga yesterday, the news that came out and said now the government is bringing a subsidy, and they now a 2-packet unga will be costing 100 shillings. All right. Before we move to the inflation, let us first look at the unga. All right. So from where you sit, just give us your reaction on that.
Thank you, Kevin, for inviting me. We are grateful as an institute. For the hunger, I think I have different perspectives. Of course, we've seen a lot of discussion since yesterday, but let's put things into perspective when it comes to that subsidy on hunger. There has been a lot of extended droughts in the country, and therefore that has really reduced the production of maize, and maize being the staple food. The economy has experienced what we would call a demand pull, where you realize that the demand is high and the supply is short, is less. But what has really caused this, the maize farmers have withheld their maize, now leaving a very thin window to the government and to the ordinary mwananchi to patronize. And therefore, when they caused that shortage of supply, there was no other option that could happen apart from the government coming to the table with farmers, with millers, just to be able to bring that meal on the table. If you could have realized, when the government realized the situation is getting out of hand, that is when it opened the window for imports. I don't believe whether a government would allow that imports when we have sufficient supplies, when we have a normal demand and supply. So that window was, I will say, mechanically caused. And that is where we are. But regarding the price of the uga and its sustainability, it is a long story, because beyond the 4 weeks, we are not sure whether the millers, the farmers will have enough stock. So we may be seeing more imports into the country, and therefore, even before the 4 weeks are over, we also need to check on the policy framework, because then if we are not very careful, if we are not able to entice our farmers to be able to produce more, to sell and allow free demand and supply to flow, then as an economy, we are not headed in the right direction.
All right, still on this issue, now we have unga subsidy, we have fertilizer subsidy, we have fuel subsidy. All right, now are we a nation of subsidies? Because now it seems every time the government comes up and brings, all right, now we have to subsidize this to cushion the nation. So for, like, where are we going as a country? Because now it seems subsidy after subsidy after subsidy.
For a nation to give a subsidy, we need to, first of all, we need to understand what is this subsidy and how does the government come in to give a subsidy. For example, when the inflation is so high, or when such price fluctuations are too high, that is the only time the government comes in to intervene. We will not say we'll be a government of subsidy after a subsidy. Why? When you look at the various aspects of inflation, for instance, we have to appreciate the war between Russia and Ukraine has really caused a lot of inflation, even on the put a lot of pressure on food prices beyond the Ugali, the Ugali story. We must also appreciate for the government to come in and have the fertilizer subsidy. It is an effort to be able to spur agriculture as an economy, and to be able to increase production and feed its people and ensure there is food security. So we would say it's an economy of subsidy after subsidy. We would be able to say the government at any particular time, it has to come in to cushion its citizens to be able to go through a particular season. And therefore, sustainably, what we'll be able to do, for instance, if we are talking about agricultural subsidy, how long will this be sustained? And it can only be done through policy frameworks that are sustainable long term.
All right. And now let's move and look at an economy like Kenya is now into inflation. Can an economy like Kenya survive without inflation?
A very interesting question, Kevin. Inflation, it's good and also bad for a nation. Central banks say mild inflation is what is acceptable to spur growth. Now, you look at the Central Bank of Kenya, it's anticipated, it's projected inflation is 5%, with an allowance of 2.5 on the upper or lower side. And therefore, when we look at where we are today at 7.9, it has surpassed the 7.5%, which is usually was anticipated by the CBK.
Yes.
But when you look at that inflation, we talk of mild inflation and sometimes lesser inflation that spurs economic growth. Now, that sort of inflation that spurs economic growth it's an inflation whereby you'll realize there is now building of capital. When you build capital within an economy, and some of these aspects, they come in when you have a tax system that allows economic growth, a tax system where businesses are growing, not a tax system where you realize most businesses feel like they are choked. And a mild inflation whereby we are able to say to rank different sectors of the economy, and we say if we focus this, it can bring some other 4 or 5 sectors around and spur economic growth. That inflation that will ensure there is capital within and cash flow and disposable income within citizens, so that they are able to grow businesses, so that they are able to create employment. That inflation is bad. Now, where we are now, it's a high inflation, which has really been quite costly in this nation. We've seen a lot of businesses close, a lot of employment lost, and that is where the government is coming in. So mild inflation is acceptable. It is past economic growth. Yeah.
All right. So let us look at the trends. Now, in 2017, we were at around 8% inflation. Was it 2017? Yeah, 2017. And then the following year, it dropped to 4%. So right now, we are at 7.9. What if we move to around 8 or 8.5%? What will we be looking at?
If we are to move to 9%, I think a lot of interventions will have to be done. And these interventions would be more of what is it that we can do to be able to reduce that inflation. One, and I would imagine you've picked 2017 because it was an election year, and here we are 2022 because it's an election year.
Yes.
But politics aside, if we are able to get to 9%, what will happen is we will widen the gap between the middle class, the higher class, and the lower class. Why? Even today, as we speak about this hunger problem,
yes,
there is a category of Kenyans who have not felt the pinch. The pinch has been felt by the ordinary mwananchi. When you look at the businesses that have driven this economy, the SME sector is driving this economy. And not until we address the SME sector, where the manufacturing sector would fall in, the agricultural sector where most players are in. That is the only time we will be able to stabilize this economy. Getting to 9%, you'll see more industries closing. You'll see a lot of capital flight because international investors will have to take their capital where they feel it is safe. And if you've been looking at the trade, even the people who are holding stocks, financial stocks, the trading has sort of stopped because everyone is like, let's wait for the election to come to an end.
Yes.
You'll be looking at things like crime increasing because when you increase the gap between the rich and the poor would come and say it is the rich who have eaten our cake, and therefore matters of security will not be there. Health issues, when we get there, no employment, no sustainable food security, and therefore the health deterioration will come in, and therefore we may run an economy of crisis. But we pray that it will get from where we are 7.9 to almost 6 in the next couple of months.
All right, so going back now to the unga price, how does a Kenyan now plan their budget? Because now it is 4 weeks, and then now after 4 weeks, we are not sure where the price is going to go. So an ordinary Kenyan sitting down and saying, all right, so I have to budget myself for these 4 weeks, and then now after the 4 weeks, I don't know what will happen. Can we see maybe Kenyans flocking in the retail shops to buy more ungas to keep for themselves?
I can tell you for a fact, I haven't gotten into a supermarket this morning, but I think there will be chaotic moments in supermarkets. And what we anticipate, and possibly because you're in the media, you'll be seeing a lot of crowds in supermarkets. And if we are not able to control how many packets each citizen will be able to take, then we don't know where we are ended to. But I believe the government, before pronouncing itself to that subsidy, it had put in some various measures to ensure it is accessible by every citizen. But how can we cushion?
Yes.
Can the ordinary mwananchi cushion themselves? And how can they live beyond the 100 bob unga? I think there would be bulk buying. Now, who will afford that bulk buying? Not an ordinary mwananchi. Because one, the disposable income is not there, even to buy that unga. Remember, we've just come from a COVID season where employment was lost, industries were closed. You've seen a lot of companies in the oil sector closing because of shortage of dollars. And therefore, you'll realize the government